Hello, everybody. So today I want to talk about Gen Z favorites, namely e.l.f, Celsius, and we're going to talk a little bit about Oddity at the end of the video. That's because the call comes after I record this video. So this video will be released tomorrow morning, so it should be the morning of Thursday right now. Anyways, let's go. So e.l.f, what about e.l.f? Stock has been a roller coaster. It went down to $100 in trading day here because Trump was elected. Market got scared. And now it's back up, and it's back up because, as it turns out, the growth is pretty darn good. It grew net sales 40% year over year for the Q2 metric, but also the adjusted EBITDA number pleased. And also they keep growing their year over year numbers, but also they've averaged, and they keep that average over the long run, 23 straight quarters, 20% sales growth. Now you always gotta dig these numbers because they are very good. I mean, e.l.f is very good at embellishing the numbers, and I really wonder how long it takes them to make these slides. They're really good at it. But make no mistake, for full year 2025, you actually had a little bit of a slowdown compared to Q1 2025. Now, remember, they have a weird schedule, right? This is supposed to be Q3 of 24. They do it all the way backwards, but just know that they've been consistent with themselves. Typically, their Q2 25, they've seen a little bit of a drop. Look at these two, look at these two, look at these two. Not here, but look at these two. They've seen a little bit of a drop typically, although this is a bigger drop than usual on a quarter-over-quarter basis. Nonetheless, the year-over-year numbers are still excellent, and their market share is still excellent. They're updating their guidance. They raised the guidance, saying that in 2025, so their fiscal year, right, 2 more quarters to go, they are guiding for between 28 and 30% sales growth. Analysts think it's going to be higher than that. They have a 22% share across their largest segment, which is makeup, but they also have over very high share, for example, in lip, that would be 10%, and in eye, that would be 8%. By makeup, I mean face, which is very, the high lips face, the F of the company. That's what I mean by that. As far as the sales go, international growth is the story for them. They're still at 91% growth year over year in international sales, and now 21% of their sales are done internationally. So this is partially a US story. I mean, still mostly a US story, but it's a partial international story, and eventually it's likely that this stock eventually will have perhaps half its sales done internationally. Now, the elephant in the room to analyze a stock like e.l.f. in the context of the election and Trump winning the election is the tariffs. The tariff conversations are coming back. We need to put back on our 2019 goggles and how we used to look at stocks in 2019 in the light of tariffs. So there used to be tariffs back in the day. They had 25% tariffs in 2019 when Trump was president, and how they had handled these tariffs was through concessions from their suppliers, savings from their suppliers. Essentially, the suppliers paid a big share of it, but they also increased their prices to recoup some of those tariffs. They're saying that back then it was 99% of their products that were coming out of China. Today it's 80% of their products that are coming out of China. But my point here, there's 2 points. Point number one is they should hurry up and manufacture outside of China because right, tariffs may be here for who knows how long. You should diversify out of China. As long as there's no tariffs in Europe, you can ship the products from China to Europe, but shipping from China to the US, that's going to be expensive. Hurry up in diversifying out of China. That's point number one. Point number two, for the medium-term investor, don't forget that the investiture is in January of 2025, and maybe it's going to take a few quarters, maybe a year until we see the tariffs. So that's really a 2026 story. So if you're buying for the short run, it should not matter too much. If you're a long-term thinker, it should matter a little more. I buy these stocks for a very long run, and so to me, that is a concern. They need to hurry up and manufacture outside of China. That's especially a concern when my other company, Oddity, which is my other makeup play, don't ask why I have two of them. They're cheap. These stocks are cheap. They manufacture not in China. They don't manufacture in China. They manufacture 99% outside of China in the case of e.l.f, Makiage, and Oddity. So to me, that's kind of a selling point for Oddity. Anyways, let's look at the valuation for e.l.f. It's a 0.18. It's cheap. It's not the cheapest, but it's cheap. As far as the rule of 40, it well exceeds at a 62. Analysts are saying 39% growth next 12 months. I think that's entirely possible given that they are themselves guiding for 2025 roughly 30% of growth, and they've achieved 40% during this quarter, this year-over-year number. They were at 40%. They're guiding 30%, but they're also sandbagging, perhaps like so many companies are right now, because there's no upside to not sandbagging. These managers, they want to set themselves good by exceeding guidance, and so they guide on the low side. So that was it for e.l.f. Stock is up right now on the news. Over the medium term, I still think those tariffs are a threat. Now let's talk about Celsius. So Celsius keeps telling us that they're gaining market share. There's a general slowdown in the category. There's a general slowdown in the energy drinks, but within that segment of energy drinks, they are still gaining market share. And they shared with us numbers like on Amazon, they're up 21% year over year. They have lodging, they have restaurants, 46% and 27% year over year growth. As far as one of the main industry association for convenience stores, it's 11% growth that they're experiencing there. The market did not like the numbers of Celsius, mostly because operating expenses are increasing and the revenues are looking way down because Pepsi overstocked. And so what happens is that you have a melting ice cube type of EBITDA. Is that a temporary situation? I'm taking the bet that it is. No financial advice, but I think this is all temporary. Yeah, I've seen this before, main distributor has an issue and then it makes all of the accounting of the supplier, kind of all over the place, and the market doesn't dig deep enough and the market gets fearful. But that's the way it is in that sector, in that industry, the convenience store business. Celsius does not necessarily always have access to the consumer. That is one major annoyance. Nonetheless, it's still the top 3 drink in the United States. It's a top drink among Gen Z, and I believe, at least the anecdotal evidence tells me that they still are well anchored in that top 3, and they are gaining some share as noted. Now, noteworthy, they did a very small acquisition, like a tiny buy for them. It's a $7.3 billion company as a reminder, and that was a $75 million acquisition. That's one of their Packers. And I want to call your attention to this in their slide, which is, so the main energy drink survey is called the Mulo Plus, and they're studying market share. And of course, they're number 3. Number 1 is Red Bull. Number 2 is Monster. Number 3 is Celsius. Notice how, Celsius is gaining a lot of share, but that's normal. They're a smaller player. Red Bull is still growing. That's interesting. But notice Monster is decreasing. When I look at this chart and the evolution of the market share up until October 2024, right? Here's the October 2024 number. When I look at the evolution, I see a general trend where Celsius is gaining share, Monster is losing share, and Red Bull was losing share, and it seems like the loss of share of Red Bull has flattened and it's gaining back a little bit of share. But I want to point that out too, which is very interesting. So they had their best month was May 19, 2024, where they had 233 million in sales, and right now they have 204. I can't really read this. 204. So 233 to 204. So let's call it, they drop sales compared to May by 12% roughly, 11 to 13%. Let's call it 12%. So a drop in sales by about 12%. leads to a drop in stock price from 96 to 29. So the stock price dropped more than 70% for a drop in market share of 12%. And one of the questions when you look at that stock is the market overreacting? Is that fair? I think the market is overreacting because I still see this drink anecdotally in my daily life. I still see it as a winner and a bestseller. And so the market may be overreacting. That's why I've been adding to that stock lately. I want to talk about the valuation. The valuation, of course, it's not the cheapest stock out there, but it's not expensive by any means in my view. It achieves the rule of 40. It's at 59 on the rule of 40. How much am I paying from that growth? A 0.24. So, top quarter cheapest, right? Not the cheapest, but then again, we gotta realize, the size of the company and then the sector of the company, knowing that this sector has been able to produce outstanding returns for many players. And so this I think is a long-term play that I'm willing to take a bet on. Now let's talk about, perhaps in terms of valuation, objectively, in my view, perhaps the best play. And that out of these three stocks, the first stock that I owned was Oddity. So back to makeup, back to a Gen Z favorite in makeup. So Oddity, their main product, they have two products. They have another product in skincare called Spoiled Child. For this case, I'm just gonna focus on e.l.f. Makiage. e.l.f. Makiage is a Instagram, TikTok friendly brand that's all over the internet. It's direct to consumer. It's all about the website. And they specialize in foundation. Look at the funny marketing, right? Woke Up Like This is the name of a foundation. What is a foundation? It's like a base for makeup. A key challenge of foundation is that you gotta find the right color. I actually, just for fun, went through their process and their questionnaire just for fun. It's pretty darn advanced. It's really, really advanced. That's a lot of questions. That's a long questionnaire, and I stopped maybe a third of the way, and I stopped. But it's pretty darn advanced. I would have never thought that. But anyways, they claim to use AI and have the best AI and the best foundation color matching technologies, which is the main impediment to buying that product and to buying online. Anyways, they're successful. They raised their outlook. The sales are doing well. The sales are up. The growth are up. And there's two things, of course. So when I input it in my number, like I said, it's a 0.16. So it is the cheapest out of the three stocks I covered today. It's not quite as cheap as HIMS, but we're getting into pretty low valuation. Rule of 40 is a 55. Enterprise value over forward revenue is a 2.94. So this is looking good. EBITDA margin is good and on the increase. Gross margin has stayed stable. Analysts predict 33% growth. Oddity is very conservative in its outlook. They've predicted growth of roughly 20% per year for the longest time. Anyways, in the light of the tariffs, this is not what matters the most. In the light of tariffs for these companies, for these Gen Z consumer goods company, the question that interests me is, do they manufacture the products in China? So I went to the last conference call. Again, at the time of recording this video, the conference call hasn't happened. And I look at where are the products sourced from. This was a former question that was asked. The majority of the products come from Europe. So if there was to be a tariff from Europe to the USA, it would be something like a 10% tariff. It would not be it wouldn't be bad at all, right? It wouldn't be like 60% on China, which is something that could be faced by e.l.f., right? Which is something e.l.f. could have. So that wouldn't be too scary in my view. And aside from some packaging out of Asia, most of it came from Europe. The products out of China amounted to less than 1% of the total sales. This is a story that should not have the China overhang. And so anybody who does a little bit of research sees that the product is made in Europe, which means that this is kind of an election-safe play. And it's working out well for me because my e.l.f. position is extremely tiny. I just started it. My Oddity position is an older position, and I think this stock, in my view, no financial advice, but this stock seems to me as quite undervalued, and I'm happy to own it. I own all 3 stocks discussed today. So anyways, this was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon, and have a wonderful day.